Hello, it's Cryptolyze. I hope you are well this Tuesday, 2 January 2023. We're meeting today to talk crypto, obviously talk BTC. We're going to talk about a week that could be extraordinary, at least that's how it's being sold to us, so we're going to come back to it because we could have validation of the ETFs. Spot this week before January 10th. It is in any case one of the topics of discussion that we find everywhere. We are going to come back to it. We are going to come back to the acceleration of BTC that we had, the implication, what it's like to do a new ATH at the start of the year, and why we have this acceleration. It starts right away. If you want to train and really enjoy bull running, it's simple. There is perfect, complete, free training available. It's through an educational journey that teaches you everything about blockchain, crypto, investment, technical analysis, and trading. All this for free in comments and descriptions. You have exercises, multiple choice questions, modules, videos, guides, everything to help you in your progress. As I explained to you yesterday, this is the narrative that is spinning at the moment. Validation of spot ETFs BTC before January 10th, and as soon as this week, that could be the case. In any case, this is what we are described in quite a few articles. The fact that we are going to have a validation which risks arriving by the deposit of the Sone being the form which were deposited by the different companies that offer this ETF. So we really have this element where we are pushed to understand that normally we should have an upward acceleration this week. We are also talking about other things, elements that we will find this week in terms of the different macroeconomic figures, which could also promote the push and validation of ETFs. Conversely, we have a day specializing in the validation of the various SEC projects, which explains to us that there is still little chance, whether it is validated today or tomorrow, because it always takes a little time from the moment when this famous Sone form is validated. It takes approximately 48 hours. This is in relation to what has already been done on the validation of the various ETFs, which may have already been proposed. So for her, it would certainly be the end of the week because basically the Sonys were filled at the end of last week. So for her, it still takes a little time to be able to get set up. And that validation will happen this way. In any case, what is certain is that the market will react to these reactions and will prepare for that. This is what we are going to look at anyway together in terms of the technical part, and you will see that it is very interesting. In the meantime, what is certain is that the big winners are the Bitcoin miners, in which we had $15 billion in revenue in December, which is just enormous. So the income comes from two things. One, necessarily from BTC mining, from an increase in the price in which we have a big valuation. But not only that, it also comes from the dynamics of registrations that we find at the moment with the BRCT20, the ordinals, which we find on other protocols, but especially on BTC, and inevitably it still generates a lot of costs. And this financial windfall is welcome because we have a new ATH level, difficulty, of the network. We will see it later in the graphic part. But therefore, obviously, fortunately, there is compensation because we have more and more actors who are positioning themselves upstream of the halving. And what is also important to note is that we have a lot of miners who have made a lot of sales currently agree on the end of the year. 2023. There are a lot of miners who have sold a lot of BTC to be able to pocket part of the profits, close their exercise, which is rather logical at the same time, and to also prepare for taking profit before the halving, because inevitably we will have an increase in the difficulty of being profitable for the miners if we also have a decrease registrations with a drop. Why not interest around the ordinals? Something quite unlikely in a market in hyper-speculation. Small reminder still on the crypto part, we therefore have the competition on ZoomX, which is always available. In comments or in description, I have opened a team if you want to join. Namely that, as usual, we have a lot of bonuses which are available in this type of event. This is one of the reasons why I'm talking about it. It is the best way to be able to test an exchange by taking advantage of the bonuses. Namely that in each team there will be $100 that will be distributed every week of training bonuses. So there is always an interest in doing so, in addition to additional rewards, such as, for example, King Liquids, in which you can earn percentages, or in any case, additional cryptos. And that starts in 15 days, so you have 15 days to join the team if you're interested. In comments and descriptions, it's available. In the meantime, on the macroeconomy, there is big news. Iran, which is in the process of sending boats to the Red Sea. So we have to understand the impact that this will have, and mainly on oil. We will look at the prices later. But the Red Sea is positioned here, so it is really a very important place in which we have the possibility of being able to do transit. And this is where the tankers are also positioned, in which we mainly pass, thereby to be able to supply Europe and the entire European part. And that's why it's really very important to understand that also, in terms of infrastructure, we have to go through this maritime circuit. And when we look at the boats, we can see that it's an area that is always very busy. So there, even, we could consider that it is less frequented historically, because normally, we must have approximately double the number of boats. And I think that we risk having oil supply problems if ever at a given moment we have a conflict which breaks out in this area, and in which we will have a pressure which risks arriving and knowing that it is quite easy to block an area. For example, by positioning yourself on small straits which are located like here, in which we can completely block, in fact, access to the Suez Canal, which is there, and therefore necessarily to Europe and the European Maritime Canal. And that would mean that we would have a re-explosion in inflation through, in fact, oil, but not only that. This means an extension of replenishment times and therefore, inevitably, potentially shortages in which we would have an increase in transport costs. And inevitably, it will have a very strong impact on services and on inflation figures, which are also essential to be able to give the Fed the possibility of making this famous pivot, which is in progress. To be anticipated mainly by stocks, the entire stock market and the entire market of the American economy over the year 2024. Moreover, speaking of figures, we recall that we have quite a few figures which fall this week. Manufacturing GDP today. We will then have the JOLT report, which falls on the consolidation of November tomorrow. We will have the Fed meeting with the Fed, minute exactly Wednesday, 3 January, which will also be dissected because it was a meeting. From the Fed, which was very important, we will have the PMI service for December on Thursday, and we will then see on Friday the average monthly salary in December, which will be important to validate that we are not in an inflation salary loop, which is still closely monitored, the unemployment rate too, and the ISM non-manufacturing PMI index, which therefore falls a lot of figures, which will be dissected at the start of the year, especially since we have finished the complex part of 2023. Now we attack on 2024, which is supposed to be a year of pivot for the Fed, and we will find out whether the data will allow us to have a pivot faster than expected or not, and to readjust. And this is a bit of the vision that we have already had for some time on the S&P 500 in particular, in which, for all those who did not watch yesterday's video, therefore from Monday 1 January 2024, the first video on the 2024 channel, we still made a new ATH. We closed above the ATH, which had been left in January 2022. We had a year 2023 that was just extraordinary. And there the question we are all asking ourselves is, are we going to hold the 4,800? Or are we going to collapse to go and rest on the 4,600 to go? Fill the small break gap that we have here at the level of the futures contract and then leave again. The idea is, do we hold here and we start again? Or do we in fact retrace? We hold here so we hold the support that we are going to create, that we are going to position here. So we were going to have a double support. We're going to have this top there, which will play. And we do a little bit to fill the small gap in the futures contract. We structure above and we leave. And that, for me, would be the best scenario to follow, like that we would have a nice breath at the start of the year, January, February. Generally, these are always months which are also complex and which are relatively in the red before we have spring. So we pose in winter and we attack in spring. So it's always this adage that is always present. It remains an adage. It is a percentage of validation, but it could come into play in particular if we have oil which is in the process of re-accelerating. We can clearly see the slight start of acceleration, so it still remains very weak. We are at $72, but we keep it in mind, when we zoom in a little, it still remains an acceleration at the start of year, over a few days, which remains relatively strong, and which we will have to monitor, because we were more in a tendency to seek. The bottom of the range we had been bought once, we had a consolidation of the trend with a rejection of resistance, so we were going to potentially look once again for a retest of 68, or even a little lower. Go look for the 67, 66 to be bought again and go a little higher, so we will see the decision that will be made. I think this week or within 10 days, we will have a very strong response in terms of oil and see if we have any hardening. Really, in the Red Sea, I think it will take time to be put in place, but in any case, we will have to monitor it and be aware of it and the risks. In terms of BTC, several things to see. First thing is that we've accelerated like crazy at the start of the year, 2024. We're off to a flying start with last night, I posted on Twitter saying we was going to look for cash to prepare for the arrival of midnight 1-2 in the morning. We see that it accelerated, and that in fact at 1 o'clock in the morning we broke the previous ATH and we made a first ATH on 2024 by breaking the 88th of 2023. In doing so, we have left a new CME gap by in fact filling the previous one, so the gap above, and we created a gap which is relatively substantial, we will see in a few moments. The two things I wanted to give you is to give you the representation here of the increase in Hashrati. So the little Hashrati is here, in which we made in 1 year 146 increase in difficulty. Domination of BTC, so that means that it is twice as hard to mine BTC compared to January of last year. So that means that it is half as profitable. On that I am exaggerating a bit little because there are also fees that are taken into account. But overall we could summarize by saying that it is half as profitable to mine BTC. So that is to say that there are more and more people who are present to mine BTC, even though it is half as profitable, and that potentially when the halving arrives, it will be half as profitable really on the day of the halving to mine BTC. Afterwards, will everyone continue to mine? Are we going to stay this high? Are we going to continue to climb? That's the big question. In any case, what is sure and certain is that when we compare these two curves here, the first green curve here, which is the representation of the cost here of mining BTC after the halving with the last miners, okay? We're not talking about the miners who are effective. Here, the S19, we're talking about the very latest ones which have been released, and we see that we are around $21,000, $22,000. So know that the curve is not yet refreshed. We will have to be patient. It always takes time with the increase in Hashrati. But I think that we will perhaps even be around 24,000, or even maybe be a little higher if we continue in this trend in terms of halving. So we would be potentially in the 25,000 in cost price of BTC. If we actually look at the other curve, which is the same here post-halving, after the halving, but this time with S19 Pro, therefore which is still the majority of miners currently used, we see that the cost price is in the vicinity of 36,000. So I put 5 centimes per kilowatt. We know that it can be less, but nevertheless, when we add the fixed assets, the effective eco and everything that goes around, we are in around 4, 5, 6 centimes. So I chose to do 5 centimes to have an effective margin. Afterwards, we do not count a part of the transaction costs which are recovered, so overall I think that we must remove approximately 10 from this curve to have the true cost. But it remains once again an average. There can be some miners who are excessively profitable in which they have profitability levels which are below 13,000 because they have the latest machines, and besides they have the best deals at 3 cents kilowatt hours, they have very few costs fixed, and therefore inevitably it will work. It will be interesting to see when we get to the halving level how many percentages of miners will unplug their machines because they will not be profitable. There we will have a real answer on those who have the best deals, those who have the best machines and how it works. Once again, it is not because we increase the Hashrati level that we will keep it. Many people think that it is profitable now thanks to the registrations, and therefore behind, turn on the machines and behind, unplug them when it is no longer profitable. At the level of BTC, so we come back to this monumental acceleration that we had, we can clearly see that we have this beautiful daily gap which has arrived, the rupture and the taking of liquidity here. If we zoom in a little more, we really seize the very strong CME gap which took place, in which we had first candle, second candle, which were the first candle taking liquidity here of all this, zone 2. In addition, what was interesting was that at one point we had worked on building this liquidity here, where we had a very good rejection that was being carried out, and we can clearly see that we were really in the process of preparing liquidity before having this big acceleration, an acceleration which was also catapulted by the current liquidity gain. We look closely at Kinfisher. We can clearly see that we liquidated all of this short part which was present. So, obviously we had a big acceleration, and this big acceleration actually gave us the setup that we currently have where we are above 45,000. We broke the ceiling that held us to 2023 this year, which was the ceiling of the 44,400 ceiling, which was complicated, which we could not systematically pass. And we could clearly see that we still had a trend which was heading towards a compression. I explained to you that this compression was still relatively strong and we was going to see a return of volatility to make a break either upwards or downwards, and that we were certainly going to see at the beginning of the year a trend which was going to be put in place. Is this a trend that is taking place? Isn't this the start of a distribution? In this case, we do not know it yet, but what is certain is that we had this acceleration. And above all, we had the breakage of all the shorts which were positioned here, and a strengthening, long ones that we find here. If we look at Kingfisher precisely with the new levers that have been put in place, we see that we have quite a few short levers that are present in the short term. We still have a lot of long ones which are above 44,450 and below 45,000, which is rather logical. And we have the starting point, which was given here in 42,750, in which we have a small liquidated cluster. What is especially interesting is that if we zoom out a lot, we see that in fact the liquidation clusters are still good on the short side, but very long term. 64, 65, 68, 69. While the long ones, we still have a little bit of short term with this level of 44,000. We will then have here the prioritization on the 40,000, 36,000. So we still have quite a bit of things at the level. CVD, we have a little reaction, so a market which is a little bit aggressive, because there are quite a few things. So there it is, quickly we can see it clearly on the heat map that we have to cannibalize all the liquidations that are there. But we are not building that much liquidity on the long side. On the other hand, what will be interesting is if we look at the open interest to see where this upward movement really came from, we will look. Here in the open interest linked to the CME to see is it linked to the CME. I want to tell you that this is the case. We can clearly see that we have the acceleration at 1 in the morning with a little bit of leverage in which we went from 5.8 to 521 billion at the level of the CME, at the level of open interest. So that means that people are playing the acceleration at the start of the year on the hype of the validation of the BTC spot ETF. So clearly we have in fact our answer. And when we look in terms of order flow, we still have quite a few things we have. One, the increase in open interest on top traders, which is relatively flat. We see clearly here on Binance, we see clearly on the general. So this means that it is really mainly played on the CME, and we have the positions of the top traders on Binance. We see that we have a small acceleration due to the valuation of the price, but we do not have too much sell. FF. We have a little sell F taking place, but we don't really have a trend, which stands out. And what is important to see is that we have a huge funding rate. It's been a long time since we had this funding rate. Okay, we look at November, we go back down in October, so we made an ATH in terms of the funding rate. So that means that we have a momentum that is being created. So we have a hyper positioning that is being created. So that really helps to monitor because I think we will really have an answer within the next few days. Arrive, whether or not we are in a sell the news. In any case, what we are waiting for here is a return of volatility. We see that we are still very low, weekly volatility. That is what interests me, to see the long-term volatility term, and we see that the momentum itself is being prepared. The momentum shows us that we have a potential acceleration of the candles which will take place. So what I am waiting for is a return of volatility at the start of the year 2024 to have an answer if yes or not, we have a sell. The news regarding this ETF validation. In any case, what we will have to see is whether we are maintaining the current level here. All right? Do we have the 44,000? Do we have the 45,000? Are we able to consolidate above and then start to rise again? And what do we want to structure? We don't forget the two targets we have. It's 48,200 and 51,500, in which we still have a lot of things to look for. And that we are waiting to go and recover. For me, this is really the important part because when we zoom out a little and look at what it corresponds to the top of what we had known at the time of Terra Luna and before the fall of Terra Luna, and so we have a lot of liquidity waiting for this part with a second inducement swim, which is located here. So, for me, we really have work to do in this area, so it would be logical to have bits here who will work in this part before potentially having this sell the news if ever, obviously, it shows up. So we preparing for this part. For me, we are always in the plan. We always accompany this upward movement, rather classic, to prepare for the events which will happen this year. As a reminder, validation of ETFs, spot, halving, Fed pivot, there are still a lot of things in 2024, and I tell you, it promises. And if you don't know how to react to what has just happened, what happened at the start of the year, or what will happen in 2024, don't forget that I made you 3 very important videos on the end of the year 2023. I put them at the end of this video so that you can watch them, and there is always my investment guide. Available free of charge in comments and descriptions. This is 30 pages to explain to you when to buy, when to sell, especially in a bull run dynamic, or in anticipation of the bull run, in commentary and description. In any case, I hope you enjoyed this video. If so, don't forget to leave me a like and a comment. As usual, we're keeping the good habits of 2023 for the year 2024. We support the channel that makes me happy, and we meet at 13:30 to talk about Link. It's been a long time since I last talked about this crypto. Chain-link crypto, which is important in the ecosystem of interoperability of all blockchains. And I wish you all a very good day.